all these things can add up. In fact, when we do a comprehensive plan for people and put all their goals in, we'll actually show them what exactly their number is. And I haven't had anybody where it's come in at around 1 million or around 2 million.
Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
You're listening to Saving with Silverman with Mark Silverman, your certified financial planner professional, the founder and the managing member of Silverman & Associates. Ron Stutz here hanging out with Mark for a little while. 520-333-7601 is your number to call if you'd like to get in touch with Silverman & Associates. That is 520-333-7601. You can call or text, your choice, and Silverman & Associates will get back with you. Let's talk about obsolete retirement planning. Mark, just like your iPhone or your computer can become obsolete after a while and need to be replaced, the way that some people think about retirement is obsolete and needs to be replaced. So let's talk about some outdated rules that people still cling to. Number one on the list here is the 4% rule. What is that, and why do people keep clinging to that one?
Sure. So there was this rule that came out, I want to say it was it 80s or 90s, where they said if you spent 4% of your money, you would never run out. Mm-hmm. So if you had $1 million, you could pull out $40,000 a year and you would never run out of money. That rule has been debunked actually a couple different times. That number is closer to 2 or 3%. And it also depends on when you're retiring, your life expectancy. If your money has to last 30 years or 40 years or 50 years, obviously that's a difference. And so, you can't just use a general rule speaking, but the 4% rule still comes up occasionally, but it's not a rule that you want to be using to plan your retirement. Absolutely.
How about the 10-5-3 rule? What is that?
Well, that rule, that's even older. That rule definitely does not work. Basically what it says is you can expect a 10% return on stocks, 5% return on bonds, and 3% return on cash. So even though stocks, we've seen 10% returns, bonds, we've seen 5% returns, cash, it's been a long time since we've seen a 3% return on that. So those numbers certainly don't apply. And if you use those kind of numbers in your planning, you're going to have, numbers that you probably will never achieve. You're going to be spending money and your accounts aren't going to be growing the way that you're planning on them by using these type of numbers. So certainly don't use those numbers.
So that is really outdated. How about the common knowledge that a lot of people think is common knowledge, and they go by this rule of thumb, move from stocks to bonds as you get older. Does that still apply?
Well, people say you take, the rule was if you're, say you're 60, you take 100 minus 60. And so 40% is the amount you should have in stocks. The point I think that as far as so happens is like if like in my example, I said 60, you would have 40% in stocks. If you're 70, then you'd have 30% in stocks. I think that general principle can apply. People tend to become, not always, but people tend to become more conservative as they're getting older. So you see people moving more away from stocks into bonds. And as they become retired, they're more about keeping their money versus, return on the money. So they're becoming more conservative. I think that principle holds true. But as far as using that as a gauge for the asset allocation, I certainly wouldn't stick to that. Everybody's situation is different. Again, you have two people that are the same age, so they should have the same allocation. No, one might have more money than the other. One might have a greater longevity than the other. One might spend more than the other. All these are certain things that can happen. So all these things need to be taken into account. So to take a general rule and apply it to everybody, I think is foolish.
You're listening to Saving with Silverman with Mark Silverman of Silverman & Associates. And there's a magic number out there. And I've heard this 1,000 times. And I know that if I've heard it 1,000 times, you've heard it 1,000,000 times. Folks who think if you get to the point of having $1 million in your retirement accounts, then you're ready for retirement. That's not true, is it?
That's absolutely not true. So this kind of applies to the last question you had. Everybody's situation is different. So to say that everybody needs $1 million or $2 million is foolish because, again, everybody's situation is different. What's your age? How long are you going to be retired? What are you spending? What's your risk tolerance? All these things can add up. In fact, when we do a comprehensive plan for people and put all their goals in, we'll actually show them what exactly their number is. And I haven't had anybody where it's come in at around 1 million or around 2 million. We'll run these plans and it'll say in today's dollars, you need 3.67 million or whatever it might be. Everybody's situation is different. And so saying that you need $1 million in retirement may or may not be true. And in fact, I can tell you for most people, you need a lot more than $1 million to retire.
Mm-hmm. Okay, one more I wanted to ask you about here in our conversation about obsolete retirement planning. You'll need less income in retirement than you needed while you were working. Maybe that was true at one point, but I don't think it's true very often these days.
Yeah, I just had this conversation with a client earlier today, actually. So they say you need 70 to 80% of your working income in retirement. Where I think that holds true is maybe you had a mortgage of maybe 20% of your income that you were paying, and maybe now that you're retired, maybe that mortgage is paid off. You still obviously have homeowners insurance and property taxes and maintenance, et cetera. But maybe that mortgage is gone. So you're still spending the same. You just don't have that mortgage anymore. I would say for most people, they're going to spend about the same in retirement as they did in their working years. Sure, some people might spend less. I actually have some clients that actually spend more. It just depends on what you're going to do. In retirement, if you're going to be traveling around the world and taking cruises, et cetera, you might require more money in retirement than you were spending when you were working, because now you have more time.
Sure.
And that's one of the things that's important, is understanding that now that you have more time, how are you going to occupy that time? Are you going to get a part-time job? Are you going to be, donating your time at a charity or something that you care about, whatever it might be? So it's understanding those sorts of things. But I would generally say most people, because it's hard to, this is one of the tough things about planning. It's easy when we do plans for people that are already retired because we know what they're spending. But if you're not retired and you're planning on what would I spend in retirement, it's not an easy task. But what I can tell you is most people spend about what they did in retirement, that they're going to spend in retirement, as they did when they were working.
And there's a real danger of spending more too, because, we have these conversations all the time about how, a lot of things get done on Saturday. You run errands on Saturday and take care of things you haven't been able to do during the week. After you retire, every day is like Saturday. So you're more inclined to go out and spend money all the time. So, that's a real danger. I'm going to give out the phone number here in just a moment, but when folks place a phone call to your number, 520-333-7601. What happens from that point on?
You're going to set up a time to have a conversation with me for what we call an introductory call, where we're going to spend some time on the phone. I'm going to answer any questions that you have. I'll have some questions for you. And then we can determine if we're both on the same page to determine if we should have a get-together meeting here, get acquainted meeting here in the office, and discuss our financial planning process with you and see if it's a good fit for what you're doing. Either way, whether you're a fit or you're not a fit, it will be well worth your time. I try to help everybody that I can. That, again, doesn't mean that you'll become a client, but I'll at least point you in the right direction or give you some general advice that I think will improve your financial situation. But the only way you can know is by reaching out or calling us or texting us or sending us an email on our website, et cetera.
You've been listening to the Saving with Silverman podcast. If you have any questions at all about your financial situation, please give Mark Silverman a call. Again, his number is 520-333-7601. Or go online to savingwithsilverman.com. For Mark Silverman, I'm Ron Stutz. We'll see you next time on the Saving with Silverman podcast.
The Saving with Silverman podcast is brought to you by Silverman & Associates Wealth Management, LLC, based in Tucson, Arizona. The show is available on Apple Podcasts, Spotify, Google Podcasts, and everywhere you listen to shows. Subscribe to the show on your favorite app today and never miss an episode. Just search for Saving with Silverman to find us, or visit savingwithsilverman.com to listen to past episodes, to contact Mark, and to learn more about how to make smarter decisions with your money. All matters discussed on this show are for informational purposes only. Opinions expressed are solely those of Silverman & Associates Wealth Management, LLC, and staff. All topics covered are believed to be from reliable sources. However, Silverman & Associates Wealth Management, LLC makes no representation as to its accuracy or completeness. The show shall in no way be construed as a solicitation to sell securities or investment advisory services to residents of any state other than Arizona or where otherwise permitted. Topics should be discussed with your individual advisor prior to implementation. Fee-based financial planning and investment advisory services offered through Silverman & Associates Wealth Management, LLC, a registered investment advisor in the state of Arizona. Insurance products and services are offered through Silverman & Associates, an affiliated company.